Hi, this is Jocelyn with Just Accounting, giving you an update on the PPP if you've received money, the IR2020-57, how that incorporates with your payments, as well as the 7200, and just some holistic idea of how it all works together. So if you did get the money from the PPP from your local bank, or a banker has said you will be authorized for the money, typically, they're asking you to open up another bank account because this is technically a loan until you can prove that it's not a loan. So then there's a whole bunch of paperwork they're going to have you sign and read. You would want to read it fairly closely. You will have to pay it out along with the bank's terms. So if the bank's terms are potentially stricter than the IRS's or the Treasury's terms, you're probably still going to have to follow those. So these are the Treasury's terms for the payback for the PPP money that you might be getting. So we'll go over this. The loans will be forgiven as long as the loan proceeds are used to cover payroll costs, most mortgage interest, rent, and utility costs over the 8-week period after the loan is made. You have to pay out all of the money within 8 weeks or it becomes a loan. And employee and compensation levels are maintained. So no giving yourself a $50,000 raise just because you got extra money. Payroll costs are capped at $100,000 for each employee. Obviously, you're only paying 8 weeks of loan, so it's kind of weird at that point, but you can't pay them over $100,000 annualized. So technically, you shouldn't pay an employee for 2 months more than $20,000. Not that hard of math. Due to the likely subscriptions, it's anticipated that not more than 25% of the forgiven amount may be non-payroll. This says anticipated. Your bank documentation will say required. So loan payments can be deferred for 6 months. So if it turns out that it is a loan, so your money's going to go into your new bank account that the bank will set up for you, or you have to go to the bank and set up. The bank will be a hawk on that money, and they will probably ask you every time money comes out of that what that is for. And if you're not documenting that to the T, then you're going to have to pay that back at some point. They will be watching it. It is money to them that they then have to pay back to the government at some point if you can't document that you used it for the right stuff, right expenses. So these are the dates when you could start applying for it. Where can you apply? Who can apply? Essentially, everyone can apply if you're in this list. So this is the fact sheet from the treasury.gov. So what do I need to apply to? That's typically your application at your local bank. What information will you need? You'll need payroll documentation. It's going to be very difficult if you don't have 941s. So work with your local bank on what they would need for payroll documentation. Do you need to look for other funds? No, not necessarily, but we'll talk about that in a little bit. How long will this program last? It's open until June 30th, so you can get the money up through June 30th if they have enough money, and then 8 weeks from there, you better be depleting it. How many loans can you take it out? Only one loan. What can you use it for? Payroll costs. So defined by the IRS, that means anybody who's getting paid as a wage for working. So if they have to work and they're getting tips that are then distributed to them through the W-2, that's part of their payroll. Anything that's included in their payroll, including benefits. So that's an interesting documentation there, which would typically be like health insurance, potentially. It's not super defined because this was thrown together fairly quickly. Interest on mortgage obligations for your company, rent for your company, utilities for your company. So these are the things that can be paid for with the loan that will be considered that. That gives you a little bit of a brief description of what payroll cost is. You want to go to the IRS website because that's where the definitions for these things are going to be. So if you're wondering what is commission, go to the IRS website and Google commissions. What's that definition there? What are tips, right? What is that? How do I pay that? So employee benefits, what do I pay for that? What is included that? Now, if you're using the IRS benefit, where the IRS is paying that, I would not try to double dip if I were you. It's probably going to come back and bite you in the butt. So if you're paying for these things out of pocket, then it would be considered the PPP, right? If you're using the PPP money for these things, it will be considered the forgivable part. You can't say the IRS paid it, but then you paid it too. That's not going to work. State and local taxes assessed on compensation for people in Hawaii, that would be GE tax could be paid on the compensation. So just these things here. For sole proprietor, I don't know any sole proprietors who got it, but if you did, this would be wages, commissions, income, or net earnings, etc. Does it cover sick leave? Yes, it would cover sick leave. It excludes expressively what I just was talking about. If you're doing the FFCRA credit, you're not allowed to double dip. So we'll talk about that in a second. How large can my loan be? That's pretty calculable. Your bank will calculate that. How much of your loan will be forgiven? So you will owe money if you do not maintain your staff and payroll. So that's interesting. So your loan forgiveness will be reduced if you decrease your full-time employee headcount. Level of payroll, your loan forgiveness will be reduced if you decrease salaries by more than 20%. They're trying to keep your people on payroll, right? Rehiring, you can rehire, and I've seen that you can rehire new people if your old people aren't willing to come back. So, but you're looking, if you had 50 people on payroll, they're trying to get you to get back at 50 people on payroll. It's pretty basic common sense there. How can I request for the forgiveness? The lender will be asking you for that. They will also be asking you for all your documents, and they will probably keep track of that through your bank account. It's an interest rate of 1% if you don't pay it all out. Payments are deferred for 6 months. Loan is due in 2 years. Please pay the money out to your employees or the people that you took the money for. It needs to go out to them. It's not for you. It shouldn't become a loan. Just pay it out to the things you need to pay it out for. It's not supposed to be a loan. It's supposed to be to help the economy keep people employed. Can I pay my loan earlier? Yes, there's no collateral. You don't have to personally guarantee it. What do you need to certify? Economic uncertainty makes a loan necessary to support your ongoing conditions. So if you have, your business might be suffering or could be suffering or will be suffering, that would probably be qualifying. Anyways, there's some other things of what would qualify. If you have questions on that, you can always call me. Now, the bank, oddly enough, sends this statement. So you'll see this straight from the Treasury. This is what the bank had to certify. They're going to tell their clients to do. But each bank has their own little quid pro quos and more strict requirements potentially. So this is basically saying you have to spend the loan on these types of expenses. At least 75% is paid on payroll. They don't necessarily say the other 25 has to be on rent, but that's what the Treasury document said. So I would go with that. Expenditures that serve on the basis for forgiveness must be made within an 8-week period. You have to have the correct documentation, which is 941, or rent or utilities. Those are things you can do. PPP loans can be, so then they flesh it out a little bit more at this bank. Payroll costs as defined in this act, costs related to healthcare, medical, sick, insurance premiums, mortgage interest payments, rent payments, utilities payments, interest payments, or refinancing an EIDL loan. That's interesting. 75% of the loan has to be used for payroll costs. The rest has to be used for rent, utilities, mortgage, or refinancing the EIDL. The loan of forgiveness can be up to the full amount. The borrower is not responsible for any loan amount if they use all the loan for forgivable purposes. This is where that 25% would kick in as common sense. So 75 payroll, the rest of it under rent, utilities, GE tax, etc. That would be if you use all the loan for the forgivable purposes. It doesn't really spell it out there in a lot of good language, but that's what that would mean. Do independent contractors count for employees? No, you can't pay your independent contractors and say that was a legitimate employee. You've got to have an employee. You can't say independent contractors are employees if you're paying them a 1099. Just put them on payroll if they're a legitimate employee. The following, so I think this was basically copied from the Treasury fact, so they kind of recreated it on that. So that's kind of the information for the PPP. If you got the loan from the bank, you have 8 weeks to use it. Please use it all and give it out to the people. So let's say, for example, I'm going to just draw a little chart here. So say you had a business and your PPP loan was $100,000, and you got the PPP, and that would carry you for 2 months. So technically, it's supposed to cover 8 weeks, which, depending on the month, could technically be 2 months. So say, for example, you got $100,000. Ooh, is that backwards? Can you see that? $100,000 PPP, 2 months or 8 weeks, right? So you get that and you pay your employees for the $100,000. It goes all out to the payroll. Great. Then if you're still having problems, from what I can tell in the law, what happens then is you're still having problems. You were doing fine. You brought everybody back. You're working. Let's say you're a restaurant and you got the money. And now your people are back at work doing takeout, or I guess whatever they're doing now. And you're paying them the $100,000. So 2 months, the funds run out, right? So we're talking June 24th, because today's April 24th. 8 weeks from now, you've run out. Now you're kind of back up and running, limping along with business. And one of your employees calls and says, I think I have the coronavirus. And you're out of money at that point. What's supposed to happen, this is what was supposed to happen in a larger sense, was this CARES Act, essentially, the IR2020-57, as I refer to it, was supposed to kick in to provide 80 hours of paid sick leave. Now, how this really actually works is, so for 2 weeks, your employee calls in as a waitress and says, I'm sick, I have the coronavirus. I need to take off because I'm sick and I'm under quarantine. I can't go out. Okay, so that's all legitimate. And so then you apply after this, not during, after you've used up your PPP money, if you've gotten it. Then you go to your payroll provider. I don't do payroll, but you would go to your payroll provider, and hopefully by that point they understand how this works. You then apply at the 941s for the 80 hours of paid sick leave. You still have to, out of pocket, pay the net. So if your worker gets $4,000 and you will still have to pay out the net, which might be about $3,200, right? So out of your bank account, which you have no more PPP money, your bank account has to have them a net amount, and the IRS credits your 941 until it runs out. So theoretically, you have a mix of employees who are working, a mix of employees who are taking off, et cetera, right? So you do 80 hours of paid sick leave per employee, and this goes through, I believe, December 31st. So then for the next 2 weeks, right? So 80 hours is 2 weeks. So the next 2 weeks, they have paid leave, potentially, right? Paid leave. So the next 2 weeks is paid leave. Then after that, if they have children or they're eligible for this child care leave credit or a paid sick leave credit, this is an additional 10 weeks, right? So there's the 80 weeks of full-time pay. Then there's the paid sick leave, which is the 80 weeks, 80 hours, 2 weeks. So that's up to that amount. There's maximums here. You can't just pay yourself whatever. Then if you're taking care of somebody, you get an additional $2,000 for 10 days. And then you get an additional, and it kind of tiers, right? First you get the paid sick leave, then you get the child care, this one here, then you get the child care leave credit. So then that's for 10 weeks. And of course it is not full pay, right? It's $200 a day. So then you have 10 weeks that you are paying out of pocket for the people that have children or are taking care of people. So you've got 2 months of the PPP, 2 weeks of the paid leave, 10 weeks of the care credit. And then if you're all still having problems, at that point, what I can see, that's the point when you're supposed to be applying for unemployment. So that's the final thing. So after 2 months, 2 weeks, 10 weeks, then you apply for unemployment if your business is still having problems or you're shut down still, right? That's kind of what they were trying to do with the initial application of all of this stimulus. It just wasn't rolled out fast enough. This is a problem. They couldn't implement this and get it to the people who needed it before you told your employees to go on unemployment. So unfortunately, we're in the predicament that people are gaining unemployment. Whether they're going to call their employees back, that's what I would suggest. Take them out of unemployment, start the process that was supposed to happen so that everybody didn't have to shut down. It just didn't get implemented fast enough. So if you are lucky enough to get the PPP money, use it the way it was supposed to be used. Now, the other point about this right here, which I think a lot of people are going to be fined for, which is very not friendly for me. I don't love it. This will happen. But theirs is called non-enforcement period. And anytime the IRS tells you there's a non-enforcement period, it means that it will be enforced at some point. So labor will be issuing a temporary non-enforcement policy that provides a period of time for employers to come in compliant with the Act. You have to be very careful when the words of the IRS are stating these things. It means somebody's required to do something, and there's going to be penalties if you don't. So under this policy, labor will not bring an enforcement action against any employer for violations of the Act, so long as you've acted reasonably and in good faith, will focus on compliance assistance during the 30-day period. So they're going to give you 30 days to become compliant. That's what that's saying. And basically, you have a small business exemption. If you have more than 50 employees, hopefully you've already understood, I'm required to pay this whether I like it or not. You're supposed to have money whether you like it or not. And they can fine you whether you like it or not. That's theoretically what it's saying. But if you're a small business with fewer than 50 employees, you will be eligible for an exemption, which common sense then says if you have more than 50, you're not eligible for an exemption. You have to pay these things. Will be eligible for exemption from the leave requirements, which are these ones up here: paid leave, paid sick leave, and childcare leave. That's the leave they're discussing. Exemption from the leave requirements relating to school closing or childcare availability, where the requirements, and this is the key, where the requirements would jeopardize the ability of the business to continue. If you have no money in your bank account, if you had to pay money out of zero money, that will jeopardize your ability to continue. So you would be eligible. I don't know how they're going to verify this. Maybe with bank accounts, I'm not sure. Anyways, you're required to pay this out. So if your employees come and say, I'm sick, I have a child I have to go take care of, you have to pay this out if you are able to. That's kind of what it's saying. The exemption will be available on the basis of simple and clear criteria that will make it available in circumstances involving jeopardy to the viability of an employer's business as a going concern. So you've got to apply basic common sense. If you have $500,000 in your bank account, you need to pay it out. If you have $2 in your bank account and you have no business, you probably are going to be exempt if you have less than 50. Now, what I can't seem to clarify, this only exempts school closings and childcare unavailability. You know what it doesn't exempt? This. So theoretically, they're trying to make everyone pay this no matter what. That was the initial intent. Everyone gets paid this way. So even if you didn't get this, you would have gotten this, which would have delayed unemployment for 2 weeks at least. That didn't happen. Anyways, your payroll has till December 30th to take advantage of these things. I would highly suggest getting up with your payroll so they understand the law. If they don't understand the law, rewatch the video. The other thing that's happening is the 7200 form is coming out, and they're doing updates on that almost daily, it seems. It's called an advance payment of the employer's credit. So if you run a legitimate payroll, you can get some of your credit back. It's a kind of a separate process, and it's 50% of your, so if you look here, it's 50% of the employee's pay, right? So if the FFCRA, which is what they're now calling it, Families First Coronavirus Response Act, FFCRA, if you paid them and you don't have the money to get it up to pay it out of your pocket, there's a refundable tax credit that's equal to 50% of the wages paid after March 12th and before January 1st of 2021. So December 31st is kind of their cutoff for everything. A maximum of $10,000 in qualified wages can be counted towards the credit. So this is the money they paid back, theoretically, because the math on that works kind of backwards. So payroll tax, so let's say the employer had $10,000, employee, I'm sorry, had $10,000, and you would cut that in half by 5,000, by 2, because it's 50%. So $5,000 per employee if you didn't want your credit from the paid leave credit to apply to future payrolls. So if you want your money now or you need the money now, you can get it. It would come through this Form 7200. Check with your payroll people before doing this. But essentially, you get $55,000 per employee, up to $10,000 if you can't afford it out of your own pocket. Then what happens, the reason for that is because out of $10,000, as an employer, you know that probably 20% is going to federal tax, which has already been credited. So that's $2,000. And then about what, 12.6. So, and then another 12.60 is your federal and Medicare and Social Security, plus $2,000. So essentially, you would be paying $6,740 kind of for someone's net pay. So minus 10,000, you're looking at plus 10,000. Net out of your pocket, $3,260 for every employee, that you wouldn't get a refundable credit. So refundable versus non-refundable credits with the IRS. Refundable means you can get your money in your pocket in a check. Non-refundable credit means it'll keep crediting you until you need it. So on any tax return, a refundable credit is better than a non-refundable credit, because refundable will pay you. Non-refundable just credits your next tax return if you don't need it. It's a lot of questions. Can check my videos. I'm going to try to update them all the time. And hope you have a great day. Thank you. Huh? Oh, yeah.